making of the markets at this point in time? Because, yesterday, of course, one of the worst monthly falls, in fact, the worst monthly fall in the February series. And the index did manage to hold above the 20 DMA. It has been a crucial support for us. But as of this morning, we have broken below it. Do you think a sharp sell-off could be in the offing here? What's your opinion here?
Yeah, good morning, Suyash. Yes, so if you look at the broader market setup, the Nifty is making a new all-time high, but somewhere it is not able to sustain or it is showing signs of fatigue once it crosses the 22K mark. Yesterday, there was a range consolidation breakdown ahead of the expiry, surprisingly. So the expiry move, which normally happens on Thursday, happened on Wednesday. That's the sense I derive. 21,100 is the resistance which is working out, and we are dealing with one of the most important support points, which is 21,850. So as we head into the March series, the rollovers are around 68%. The way the rolls are happening in the last couple of days, my sense is some short positions are slowly building up into the system. I would give levels some importance here. If the Nifty sustains below 21,850, that's the first sign that March series might head into a correction mode. So keep a watch out on those levels. As for today's expiry, the levels would be 21,850 to 21,100. My sense is it is going to be a muted expiry today. 21,950 might hold on, and the market may spend a majority part of the day oscillating plus minus 50 odd points from the 21,950 odd levels.
All right, and what's the view on the banking pack? Because Akshay, we have spoken about it extensively. Whenever there is, some bit of a bull run that starts to build in the banking space, it just gives it all up. We had rallied by about 2,800 points since making that recent low of about 44,600 sort of levels, have given up about half of it. Where do we go from here?
For the bank index, the development is negative for short-term trading. Clearly, the bearish candlestick pattern, which we noted yesterday, was a breakdown of the support zone. If you recollect last week, you had a strong breakout in Bank Nifty, and this entire positive momentum was broken yesterday once Bank Nifty broke the level of 46,400. So a negative setup. Bank Nifty should crawl up all the way back again, cross yesterday's high, then only you have some kind of a hope of recovery or rebound in momentum as it currently reads. Yes, it's the expiry day, so 46,000 where significant open interest positioning is seen for today's weekly expiry in put writing can be the savior for the day, but this seems to be short-lived. It is a support or a hold on to the support phenomena just for day trading, but for the broader setup, the initial sense which I derive is 45,000 might be on for the March series. Today's expiry, yes, it's going to be muted, 46,000 plus minus 200 points. That's the sense which I derive. Broadly, my reading is 46,000 might hold on, and Bank Nifty might surprise you holding ground for today's weekly expiry.
Good morning, Akshay, and I'll drive your attention to the mega merger between Reliance and Disney in India. It's of the worth of $8.5 billion, 70,352 crores, and of which Reliance will be injecting 11,500 crores, or almost 1.4 billion, into the venture as part of the growth strategy. Now, when I look at the Reliance stock today, after being choppy in the last few days, it is up this morning 1.12%. Disney stock on Wall Street closed very much in the positive yesterday at 1.26% up. Where do you see the Reliance stock going from here?
If I just look at the price action on the Reliance, the last few trading sessions, Reliance has held its ground, but somewhere the trading volumes and the price action has been rather muted. It's been confined in a broader consolidation zone. As I understand, the support somewhere is working around 2,900, and 3,000 is working out to be a resistance. The chart setup is positive, trading above all the short-term moving averages, but somewhere the momentum is lacking. So I still maintain a positive view on Reliance. There is nothing to worry about, just that the stock is lacking some momentum on the back of today's news. Also, the reaction has not been that strong as we anticipated. So yes, if you hold Reliance, continue to hold it. I believe even if there are some minor jerks along with the market move, broadly, this is the stock you need to be holding or buying on any dip in case it offers around 2900. Broadly, I see 3000 being broken out soon on the upside, and possibly 3100 plus are the targets which I foresee in Reliance.
All right, 2900 is where you could add positions in Reliance. A possible breakout above 3000 is what Akshay is calling. 3100 is the target he's placing on Reliance Industries. That is a view coming in from our expert, Mr. Akshay Bhagwat. Sir, always a pleasure speaking with you. Thank you for joining us here on News 9.